Hello, thank you for joining us. I'm William Seklar. I'm president of the Community House, and it's a pleasure to welcome you to today's program, Making a Difference at TCH. Many people don't realize that the Community House is a nonprofit organization that impacts lives through exceptional education, social, and outreach experiences. And while our headquarters is in Birmingham, we serve the entire Tri-County area. Importantly, we also raise programs and money support for our 4 outreach programs for children and families in need and for families or schools who cannot afford to pay, thus filling the gap for our programs in youth leadership, entrepreneurship, childhood obesity prevention, art, workshops, reading, literacy, and for low-income parents, job preparedness, and family nutrition. Within each Making a Difference show, we focus on individuals in Birmingham, business people, and companies throughout the region who are involved with the Community House at TCH and who are helping make a difference for us in supporting our programs and events. The Center for Wealth Education is a 2-part series which is designed to help educate the public in an information-rich and non-selling environment on wealth management topics. Thanks in part to our generous sponsors, this program is brought to you at no charge. We do request that you contact the TCH organization, the Community House, to confirm your spot in the audience, as space may be limited and usually is. The first session will take place on March 25th, and the theme is Money Matters the Right Way. We are delighted to have 2 of our panelists, or 1 panelist, Dan Serlin from Serlin, Trevex, and Stern, along with the event moderator, Camille Jane, founder of Matters at Hand. Welcome today, thank you. Camille, I'd like to start with you, and welcome. This is sort of different. We've got a role.
It's great to see you on that side.
Thank you, and it's great to see you as well on the other side. Camille, you began this program last year when you were the president and CEO of TCH. Perhaps you can tell us a little bit about the background of Center for Wealth Education and why it started and what its purpose is.
Sure, and again, it's great to be here as a guest, so thank you for being our host.
Thank you so much.
We were thinking, because we are a community education resource, that what could we do more for the community in terms of educating them in important areas, and we thought of maybe starting different centers. And the first one we thought that we could really provide excellent education for would be wealth management education. Not that we are the advisors like Dan and others who do that, but we have so many wonderful friends and corporate partners at the Community House in the wealth management arena, whether they're estate planning attorneys, bankers, insurance in terms of life insurance, long-term care insurance, tax, people, loans, that we could really provide, as you said, in a safe, non-selling environment that is always the Community House, excellent panelists to educate people so that they could go forward for the whole community. So the first one is wealth education. We were also hoping at some point maybe health, the Center for Health. So.
Absolutely. Well, most people know you, Camille, as the former president and CEO of the Community House, but many of you may not know that you are the owner or founder of Matters at Hand, which is its own wealth management education company. You're a moderator for this program that's coming up in this panel, and it fits right into the discussion. Tell us a little bit about Matters at Hand and what you do.
Well, I founded it when I was in California, and I think in 2001. And we are facilitated, and a lot of people ask, when are you bringing it to the Detroit market? So now's the time. Thankfully, thank you, because you're here at the Community House now. We are expert facilitators who go in to clients that are, I'd say 90% referred by their advisors, because they trust their advisors. Many clients, especially high net worth clients, you'll know this, the more they have, I don't want to say the more messed up their affairs are, but they're focusing on other things. And they don't have the time, the inclination, or the knowledge to actually know if their trusts are valid anymore, if their insurance has termed off. Many in property casualty are probably underinsured and paying too much. Should they get long-term care insurance, all their taxes, their investments? We go into their homes and offices, gather everything, review everything, and let them know where we think they might need help, and either work with their current advisors, or some may want different advisors. So we kind of become them. We write all the letters, we do all the spreadsheets. The advisors love us because we get their materials, information faster so they can do their good work. And we're only in their lives maybe 10 to 12 weeks. We leave, so we don't compete with the advisors. They're our secondary clients. We're there to help them, and then we help the clients feel safe, and they all say they feel they can sleep at night. So we say we help them go forward by getting their money matters in shape.
Well, Dan, you must love what Camille is bringing to us in the community. You're an attorney, and you're a partner with Serlin, Trevex, and Stern. And I also want to mention that you're being recognized at the annual gala as a pillar of vibrancy. So congratulations to you in the area of wellness, and we congratulate you on that honor. You're participating as a panelist in March, and your topic is who should inherit your IRAs? Right. What should people take into consideration, Dan, when determining who should inherit their IRA?
Well, IRA has sort of become a catch-all phrase for retirement plans in general. There are a number of different varieties. You know, there are 401ks, SEP IRAs, 403bs. There's a lot of nomenclature, numbers, all those kind of things. And opportunities arise in each different kind, but oftentimes when an account holder dies, the amount is rolled into an IRA because that's where the opportunity to do some things that can save a lot of taxes show up.
I see.
The most important thing with an IRA, though, is have a named beneficiary. The worst results occur when there is no named beneficiary in an IRA. It will go to the estate of the deceased individual, and the taxation can be 70% in those situations, and quite draconian. Nobody likes to write big checks to the IRS. It's like a personal anathema to me. I hate doing it for clients. But that is, I would say, number one is make sure you have a designated beneficiary. As Camille said with Matters at Hand, the inclination for people, particularly as they rise in wealth, but just human nature, is to procrastinate on these things. Nobody likes to think about dying, legacy planning, etc.
Absolutely.
It's difficult. But looking at your beneficiary designations every couple years, making sure that things are still how they were when people's inclination is, I get a job, I have a company retirement plan, I write down the IRA, 10 years later, maybe a divorce has occurred, maybe a kid's become irresponsible, someone you originally wanted to inherit may be out of your life, relationships change. If their name is on that beneficiary designation, they're getting the money. So ex-spouses sometimes, missing a kid, you have another kid in the interim, guess what? 2 out of 3 kids inherit, and the third one's just sort of standing there looking forlorn. So reviewing those beneficiary designations is the biggest consideration out of the gate on IRAs.
Well, there are different implications. Can you delve a little bit deeper, if you could, as far as if the spouse inherits the IRA versus a non-spouse, and tell us give us some advice on that.
Sure. Spouses present some unique opportunities. Under the Employee Retirement Act, ERISA, it's a heavily legislated area, so there's lots of rules. Spouses get sort of most preferred nation treatment under that.
I see.
That's sort of a choice we make as a nation, like marriage taxation, other areas that encourage marriage. A spouse can actually convert the IRA of a deceased spouse and make it as if it was their own IRA, so they can stretch it out over more time. If something happens to them, they can then pass it to beneficiaries as if they were the original account holder, whereas any other beneficiary can't do those things. There are opportunities to stretch the payments longer with other beneficiaries, but that conversion can only happen if it's a spouse inheriting that IRA, and that can be a powerful tool.
Dan, as far as the IRAs themselves, can you maybe talk to us a little bit about the tax laws and how they different if you inherit a Roth IRA versus the regular IRA?
So a Roth IRA is funded with after-tax dollars. So you've earned the money, you've paid tax on it, and then you're contributing into an IRA with those after-tax dollars. So then distributions out of that IRA are then not taxed again to the account holder or to the beneficiary. With a regular IRA, it's pre-tax dollars. So those are not taxed. They're allowed to grow tax deferred during the lifetime or the contribution period, but when those monies start to come out, they are taxed as ordinary income to the account holder. So there was a time in, I would say, maybe the 70s, a lot of folks were putting a lot of money in IRAs because that was the only game in town. Roth IRAs didn't exist, sort of some alternative retirement plans didn't exist. Permanent insurance was still sort of limited. So there are many folks who are retirement age now who the largest asset in their estate is the IRA, and as they take that money out, they're upset to see the income tax hit. However, you have to remind them they got that 40 years of buildup with no tax. So you hope that that tax-free buildup outweighs the income tax currently because their income is likely dropped in
In
retirement.
fact, if you want to avoid taxes altogether, you can have a charity.
Absolutely.
That's your benefit. And
Yep.
which I do. Community House
Yep,
is
thank
one
you.
of them, and Cranbrook. But you have
Yep.
to. I had to have my husband sign off that he is
Right.
okay with that. So that's interesting that you have to get your spouse's approval.
Yeah,
Hey,
thank you for
honey,
getting that in.
good news is going to charity. Bad news is
Another
not going to you.
aspect of the retirement law is a spouse, you can't sort of disinherit a spouse from an IRA without a court order or without them signing off. But what Camille's talking about is required minimum distributions, which is the amount you must, once you hit 70 and a half, you have to start withdrawing monies out of your IRA, and it's an amount that's divided based off your life expectancy on the IRS tables. And in any given year, under current law, if you don't need that required minimum distribution, whatever it is, you can donate that to a charity without any income tax implication to you. It goes directly from the IRA to the charity.
And when you pass away.
Right.
So never to the
It's been quite a
IRS.
benefit for charities, and it's been a nice thing to encourage particularly high net worth individuals who don't need that money to live on to make those donations.
Well, it seems like this is an important panel, and I would encourage our viewers to sign up right away. It's a very important topic, and I'm grateful. Camille, the panel on March 25th also includes Jenny Meyer from the Bank of Birmingham and Sean Mitros from DeRoy and Devereaux. Can you tell me what topics they'll be covering?
Sure. Jenny's going to be talking borrowing for businesses. So she'll talk about the whole array of business loans that you can have, including SBA loans, what banks look for to qualify or get pre-approved. And Sean is talking on balancing equities and bonds in your portfolio, the different vehicles you can use, how to determine your risk profile and your cash profile. And then we are going to put him on the spot and ask him to give us a little bit of what he thinks the market's going to be doing in the next few months.
Well, we are eternally grateful to both of you today. Thank you so much, Sean, for being here. Congratulations on your upcoming honor. Camille, thank you so much for being a sponsor and a moderator. We're really grateful for your
My pleasure.
continued service to the Community House as well. Camille, how would they, if folks that want to know more about Matters at Hand, how will they find out?
They can go to mattersathand.com
Okay.
or email me, cjane@thejanegroup.com. Matters at Hand is a division of the Jane Group. I also want to mention that on April 22nd, we have our second CWE, which is all about real estate. So.
Absolutely. Well, thank you so much for being here today. Thank you for joining us. There's certainly a lot of information to cover in these sessions. I want to mention that each of these sessions conclude with a Q&A, so it's a perfect opportunity to get expert answers to their important questions from the folks on our panel. Again, there's no charge to attend, but registration is required, so you can register by visiting our website tchserves.org, for more information. We're going to take a short break, and when we return, we'll be joined by three panelists from the April session for Center of Wealth Education. Thank you again today
Thank
for
you.
being here.
Thanks, Bill.
Thank you. Welcome back. Thank you for joining us. I'm William Seklar, president of the Community House, and today we're on Making a Difference at TCH, and we've been talking about the Center of Wealth Education, a two-part series which takes place on March 25th and April 22nd from 6 to 8 p.m. at the Community House. This is a free event, and it covers topics that affects all of us, such as borrowing for business, managing IRAs, balancing stocks and bonds, selling and renting your home, mortgage and home equity, loans, as well as legal protections for your real estate investments, all important topics. I want to welcome today our guest panelists from the April 22nd Center for Wealth Education session, which is all about real estate this time. Welcome to Brian Henry, to James Chrisbrook, and Maggie Courier. Thank you, folks, for joining us today.
Thank you for having us. Good morning.
Brian, you're managing attorney for the Orlans Associates, and we want to thank the Orlans Group for being our CWE presenting sponsor in April. We're very grateful for the Orlans Group's sponsorship, and they're one of our longest and most staunch supporters, and we're very grateful. They help us orchestrate a number of events at the Community House, including our business symposium, which took place last fall, and we're really grateful. So thank you for being here and representing the Orlans Group today.
Bill, I'm pleased to do that. The Orlans Group loves the partnership with the Community House. You do great things for the community, and we're really pleased to continue that partnership with you.
Well, thank you, Brian. It's a pleasure. You and I have worked together over the years, served on the chamber board and wearing our old hats in the old days, and it's a pleasure to have you join the show today and be here for our viewers, so thank you. Brian, tell us how long you've been at the Orlans Group and the services they provide to their clients.
I'm the managing attorney, Bill, and I've been there 6 years serving in a variety of roles. I originally worked in the loss mitigation department. I then moved to one of our affiliated companies, eTitle, helped start the commercial division there, and now I'm in charge of 20 attorneys in our Michigan practice. Wow. Originally our firm focused primarily on banks in the foreclosure industry, and we've since broadened that focus to include the full real estate cycle. So we represent buyers and sellers, we represent lenders, we get involved in leases. We have 4 main practice areas: the transactional real estate group, our litigation group, we have a bankruptcy group, and then we also have an eviction group. So those 4 practice areas are really set up to serve in the Orlans Group family of companies that are focused on real estate, because our mission statement is to help those who wish to own, use, or invest in real estate. So that's our real focus.
Oh, terrific. Well, Brian, I know we have so many questions and topics to cover, but perhaps one of the areas that may be of interest to our viewers today is when purchasing commercial or residential property, what are some of the key things to think about in the purchase agreement that folks should remember?
Well, that's a broad question, because if you talk about residential or commercial, I could just go over a couple things. I could really talk all morning because I've been a real estate and I enjoy it so much. But when you buy real estate, residential or commercial, and I think Jim would probably agree with this, how you take title is really important. Mm-hmm. If it's a rental property, you might want to think about an LLC. If you have a personal residence and you have a trust, you should put it in the name of the trust. A lot of people will draw up their trust. They don't realize they have to fund it. A trust is different from the individuals. If you want to, you could have joint tenants with rights of survivorship, which is a seminar in and of itself. So the way you actually own the property is extremely important. So that's obviously set forth in the purchase agreement. Your rights to inspect are important. Your lender, Maggie, will want title insurance. There's also physical inspections that are covered there. And a survey is something to also think about. I also think you need to be careful on how the deposit's held. The deposit can either be held by the realtor or your title company. The amount of deposit and how you get that back is very important. I think it's important to go over what your closing costs are. The seller usually will pay for the owner's policy of title insurance. There are prorations that are involved, and all those fees are covered in the section covering closing costs. I think people should be aware that there is something that's important to realize, particularly if you're buying in the Birmingham area, and that's uncapping of taxes. I'm sure Jim could relate to some instances where people are surprised when their tax bill goes up quite a bit. That's because property taxes are capped. So if an owner has owned it for 20 years or so, it's capped at the rate of inflation or fair market value, or the lower of those two. So if someone's owned it for a number of years, the new buyer is often quite surprised that the property tax bill they get is much higher than the previous bill. So that's another thing to be aware of. But those are, just in the brief time I have, some of the things that might be of interest to the viewers.
Well, I appreciate that. You know, I know title insurance is so important in any real estate closing. Can you comment a little bit about that for our viewers?
I can. People don't understand title insurance because most insurance people buy is prospective. So when I buy a car, it insures for future damage or a future accident. The title insurance commitment and policy are retroactive. So the policy is up to usually the date of closing, and the title company, for example, our eTitle company, will go into the title records. Those are records that are kept in the county that keep track of mortgages, liens. Any claim against your ownership interest is normally recorded in the real property record. So it'll say that you own that property subject to, it might be an easement claim or whatever, up to this date. So it's important to understand that that policy is something that you should keep. A lot of people don't keep that paperwork. If you need it later, it should be in your file. It's important to understand there are actually two policies. There's one that you get when you buy it that the seller pays for. That's the owner's policy. Then you as the buyer, normally if you finance it, your bank, Maggie, will want a mortgage policy that insures the mortgage loan. So there's two different types of insurance that are normally involved with a transaction. The rates are regulated by the insurance commissioner, so that most of the pricing's the same, and you have a lot of options to pick your title company.
Thank you so much. Well, it sounds like you need to have a pretty good team behind you in any real estate transaction, whether it's residential and commercial. And James, that kind of leads me into you. First of all, thank you for being here today. You've helped support and moderate many events at the Community House, and you and your partner, Kevin, were recognized at our annual gala as pillars of vibrancy and culture, and we congratulate you, well deserved. We're grateful for your support and for everything that you do at TCH. Tell us about your new company, Shane Park Realtors, and how it might differentiate itself by being somewhat of a one-stop shopping organization.
Right, thanks, Bill. Yeah, and I love that description of what we've created at Shane Park Realtors, and we just happen to share a front yard with the Community House.
Sure
so
do.
it's such an honor and a pleasure to support such a great organization, and to see the progress that's been made there over the past few years has really been exciting. And exciting to be a part of that, as it is in all of Southeast Michigan these days, with this this new entrepreneurial spirit and this vibrancy. Yeah, and we were honored, of course, to be named as pillars of culture last year as well. It's a really great group of people to be involved in. At Shane Park Realtors, we left our former company. We really wanted to be game changers in the industry and create something new and interesting and of a very high service level. So what we created was really what you said, one-stop shopping with regard to real estate needs. Now, of course, we don't get into the title business and we don't get into the lending business, but we have great partners who do that with us and for us. We focus on our clients' needs with regard to buying or selling a home, with regard to leasing a home, whether you're an investor or you're looking for a potential lease. We also offer an estate sale service for that demographic that needs to just get out of the house and clear out what they've had collected for years. We also offer a property management company because many people are in that position of leasing their home and they need somebody to manage it for them that knows the business. Because really the short answer is, in all of real estate needs, the best thing the consumer can do is hire a professional.
Absolutely.
You know, when you're talking about any of these things that we're going to discuss today and at the event on April 22nd, it's really getting a good professional on your side to handle that for you. So at Shane Park Realtors, we pride ourselves on that. We've grown quickly from 3 to 12 in just a year. So there are 12 of us there ready to serve our clients with all their real estate needs.
Well, it's terrific. And Maggie, you're the Assistant Vice President and Relationship Manager for Bank of Birmingham, which is also another terrific corporate partner for the Community House. The Bank of Birmingham has sponsored and supported us in so many of our events. I wanted to mention that you're the marquee sponsor as well for our annual gala on March 14th, and which is a Saturday, and we're so appreciative of the Bank of Birmingham support and the entire team. Can you tell us a little bit about Bank of Birmingham in your role as the Assistant Vice President, Relationship Manager?
Yes, well, first of all, we're thrilled and very proud to be the marquee sponsor, and we're looking forward to it. It's always a great event and always a really nice evening. So I am a relationship manager specializing in lending, largely residential lending, and as my title implies, we subscribe to relationship banking. Bank of Birmingham's a community bank that provides loans and deposits and a number of services. But regardless of what you're in need of or a client is in need of, they would work through one person. That would be me. And although you may need a commercial mortgage or deposit services, I would work with my coworkers to provide whatever is needed and make a seamless process. So you don't have a number of people going back to you asking questions that you've already answered, or asking you for information that you've already provided in the commercial loan file, for example. We make sure that we have everything we need and we get to where we need to be, and the process is smooth and easy and everyone's happy. And
Well, we're grateful again for your support. Our viewers may want to know that Rob Farr, who is the president of Bank of Birmingham, is also the vice chair of our board of directors and is doing service both in the community and also in the community house, and we're really grateful for that. You know, you guys certainly are a team, and it's a very important subject that I think our viewers should come and listen to this particular panel. I know that you have done great work for all of us, and it's been wonderful that we've had this partnership. The Community House loves to put on these programs that are informational to those in the community. Is there any, Maggie, some last thoughts? Are there anything that our viewers might want to know when they're choosing a mortgage company or a bank for service?
I would suggest asking people who you know that are close to your universe that have recently closed a mortgage if they would recommend their lender. And then ask plenty of questions. You don't need to formally apply for a loan to ask a lot of questions and find out a lot of information. If, for example, if a loan officer is hard to get a hold of, or if he uses a lot of jargon that you don't understand, you may want to shy away from using that lender or be wary. You want to make sure that you have a good fit with a lender who's going to not interested in pushing a product per se, because we are interested in getting you into the best product. You might want to discuss your budget and where your payments fall in regards to your financial plan.
Terrific. Well, folks, I would like to really thank you today. I would encourage our viewers to certainly remember the Bank of Birmingham when shopping or doing mortgages or any banking. Certainly local, also James Chrisbrook and Shane Park Realtors, right a stone's throw from the community house. If you're looking for a realtor, I would certainly, or a broker, I would certainly recommend that you go and see the Chrisbrooks, if you will. And then once again, Brian Henry and the Orlans Group, thank you so much. It's always good to get great financial information. Again, you can, it's a two-part session for Center for Wealth Education, and Wednesday evening, March 25th, is the topic, Money Matter the Right Way, and you can join us again on April 22nd for All About Real Estate. The program is brought to you at no charge. You do need to register for this, and I would go to our website, tchserves.org, and thank you again to all of our guests here today for being here and for your partnership. Thank you for joining us to hear more about the Center for Wealth Education and making a difference at TCH. Thank you, folks. Thank you.